That's very good. Donovan, you actually have already taken on one assignment to learn about a special area of investing. Can you just share with the group what that special area of investing is?
Yeah, so the name of it, the company is, well, not the company, but the concept of it is known as an ESG stock. So Mr. Wynn was just telling me a couple days ago that there's like a new form of businesses known as like an ESG company, and basically the companies are categorized by any company that's like environmentally friendly, um, think socially inclusive, and then something along the lines of like corporate governance is what they call. And it's just the three main factors that many of the companies have that are within this category. And this is supposed to be like a new wave of companies, kind of futuristic.
Okay, that's wonderful. And it is now 3:34, and a few people are continuing to join in with us, but I have started the recording, and I want to thank everybody for being on this call. This is our stock market game weekly office hours, and we like to present a small topic and just further acquaint individuals with money, finance, and issues related to that. And we've had wonderful presentations in the past, and we've got one today. And this one is very much on point with what everybody needs to know and be aware of. And it's basically a program that's called Bank On. Before getting to that, I just want to impress that I just sent an email to all of the advisors for the Milwaukee stock market game. And you need to read that email in some detail because it talks about how we're winding down. And we want to be sure every team is eligible for any prizes that might come their way, which means they have to have traded a minimum of $75,000 of the original $100,000 allocated per account. And also, they have to do a minimum of 3 trades so that they will qualify. The last one is we want your portfolio to be plus $100,000, which means you made money, but we're going to be lenient on that one because we know that everybody may not have been able to trade to that point. And I am a role model for that because mine is below, I think, 100,000. With that, let me just see if Julie or Economics Wisconsin has anything that they would like to share as announcements, and then we'll turn it over to our guest for the day. Okay, Julie or Bob Glowacki, anything you want to say?
I'll go. So you guys probably received an email from me earlier on today, and it asked for your students' information, their email. If you guys can fill that form out and return it back to me via email by August 14th. That deadline is really, really important. The reason for that is we want to make sure that we have the certificate and all that for you ready to go by the time that we have kind of the celebration Zoom meeting, which is on the 25th, I believe. So I email it out to you guys now so you guys have plenty of time to find out your student's name and their email address. Why is their email address important? Well, that's how your students are going to get their prizes. We didn't want to mess around with, mailing checks or mailing cash or gift cards. We want to give it directly to the student, so that's why that email address is important. So it will go directly to them. If you guys have any question, you guys can certainly give me a call. And if you didn't receive that email, let me know. Just shoot me an email, and I can email that form over to you guys again. All right?
That's great. Thank you. And we all want to thank and applaud Julie for how great she has been helping us with this stock market game. I think I see my good friend, Dr. Mark Shug, that might have a word or two.
I'm,
Dr. Shug.
I'm just reading off your email, Bob. And the one thing that hasn't been mentioned is to now wrap up with the post tests. So everyone all the advisors should have the post tests, and we want to get the students to complete those results and get that turned into us so that we can get a report ready for that August 25th capstone.
Okay, thank you. And everyone, be sure to read those emails from Julie and me because there's a lot as far as finishing up. Quite honestly, there are a lot of people that have their eyes on this stock market game. You wouldn't believe how different and innovative this has been to bring the stock market game through a large number of community-based organizations. We think that this is opening up an entirely new pathway for young people to get oriented toward financial literacy and investment education in particular. We've heard a lot about social justice, equality, and inclusion, and I honestly can't think of anything that's more socially unjust than sending someone into adulthood in the United States of America and they don't even know how to buy Apple stock. Let's just put the line in the sand right now and say we're going to be sure that our young people in Milwaukee and in Florida are fully equipped to know how to navigate into the wealth that the United States and our capitalist system has to offer. Um, so much to be said there, but let's start with square one, and that is to understand some of the products, services, and systems of banking. And with that, we have a person that I've gotten to know by a lot of phone calls because of the pandemic. We haven't been able to meet too much, but her name is Constance Alberts, and she is with Bank On, which she will explain. And we also have listening in today our very good friend, Carol Maria, who represents a major regulatory agency that represents all of the United States, the Federal Deposit, FDIC, Federal Deposit Institution Corporation. Constance will help me on that one. But we're so happy to have Carol listening in on this today. And Constance may or may not know that I'm one of two people to help create UEDA, where she's working, Urban Economic Development Association. Again, part of what I like to do is create systems, resources that serve communities of color, and UEDA, Urban Economic Development Association, is one that has done that for over 15, well, really over 20 years since we got that started. Constance Albert.
Well, thank you so very much for allowing me to participate in what it is that you're doing. As Bob said, my name is Constance Alberts. I am the program manager of Bank On of Greater Milwaukee. And so a lot of people may not know what Bank On is. It is a national coalition that looks at having safe, accessible, and affordable banking for individuals. And before I even get into that, let me kind of back up a little bit and tell you why I do what it is that I do. So as a young person, and I haven't been young for a long time now, I'm what's considered a baby boomer. So I'm a little bit seasoned. And so one of the things I've always wanted to understand is, how does money work? And who does money work for? So my entire career has been in looking at what does that really mean? Who has access to credit? Who has access to savings? Who has access to the stock market? Who has access to that? And so just looking at all of those different layers, I have a degree in an accounting. So when the young man said that he was in finance and in accounting, I was like, oh my goodness, isn't that like the best thing in the world is to be an accountant? I have been a mortgage lender. I have been a housing counseling credit counselor. So I've always looked at, how do we empower? So when you look at Bank On of Greater Milwaukee, that's what we're looking at. How do we empower people? And so one of the things to always consider is the foundation. And so the fact that the young people are looking at investing and what that really means for generational wealth, because so often we may buy things that will not produce or extend wealth past that one person. And so when you look at the foundation of banking, it's so very important to understand what that looks like. So Bob has a flyer that he's sharing, and I do apologize because it's very difficult to read, but I just want to talk to you a little bit about banking and the foundation. So one of the things that Bank on the Greater Milwaukee is looking at is banking for young people, and what does that look like? So banking for young people, especially if you are just starting off, you don't have a full-time job, you're really looking at saving money. And one of the things I'm extremely excited about is that the money that you're saving, I'm quite sure Bob has talked to you about investing that money so that that money grows. So why would we want you to be in a financial situation where it costs you more money just to get your money? So I have a question. How many of you like paying more for something than it's worth? Any of you like paying more for something than it's worth?
No.
Neither do I. Neither do I. And so when we're looking at banking as a whole and foundation, we're looking at financial institutions that are saying, let's eliminate this overdraft fee. And in case you don't know what overdraft fees are, is whenever you pay for something or try to pay for something and you don't have all the money in the account, the financial institution may charge you a fee. So one of the major things about Bank On is that there are certified lenders that have a program that says, these are some things we will do and some things that we won't do. We won't charge you an overdraft fee. Guess why? Because if you don't have the money in the account, you can't spend it. So that is the best foundation that you could have. Credit is not a bad thing, but credit gets into an issue when you're spending more than you actually can afford to. And so why would we want to do that in a banking relationship? So that's one of the major things for Bank On accounts. You cannot overdraw the account. The other thing is there's no maintenance fees. There's this Chime commercial, and the Chime commercial says, you know, why are you paying all of that money, and what are those fees? And the guy's like, I don't even know what they're maintaining. Why is there a fee? What are they doing for me? Well, these accounts, there's no maintenance fee.
Constance, this is all very good. There's been a request to see if you could turn on your video, just so
Oh my
people can see
goodness,
you
my
as you
hair.
present.
Okay.
Thank you.
Okay. So don't
We want to see a Black woman talking about banking to other Black youth. Thank you.
Absolutely. I can do that. Got the hair together. Not a problem. And so with that foundation, you're looking at what is it, how am I going to benefit? Because believe it or not, banking is about money. It's about making money, profit, spending money. It's all about money. So when you look at these accounts, they're really meant to be that foundation, that relationship. So when you're ready to get something, you're ready to buy that business, get that business credit, get that business account. When you're ready to buy that first home, you have that relationship. So if you can start initially with that foundation of an account, that's going to meet your needs. So one of the things that Bank On has been working on is what's called non-custodial accounts. And so what that means is that the young person actually is the one who is in charge of that account. And so custodial accounts typically means that there's a parent or guardian that has access to the account. So one of the things that we're looking at is for young people that are, let's say, 14 through 21, they have access to that account themselves. So they're the ones that monitor that account. They know what goes in, they know what comes out. It's really, truly their account. And we found that that is the most empowering thing to do, is have that young person be in charge of that account. And so Bank On in Greater Milwaukee, that's what we're looking at, is having non-custodial accounts that you can't overdraw. There are no maintenance fees. To open the account is a minimum of $25, if anything. They will accept different types of identification. Your school ID would be a form of an acceptance to open the account. The account won't be closed for inactivity less than 6 months. So again, if we can look at building that foundation for young people, it just allows you to do more and more things. As a banker, one of the things I look at as a banker is how well do you handle your account? Are you actually able to maintain that account where you don't have a lot of overdrafts? The other thing that having a bank account does, it also allows you to manage your money. You can look at your statement or on your phone, however young people do it. I still use a computer because I'm not as young. And you can look at what you're spending. So it kind of helps you to keep on track. And so when we look at Bank On, we're really looking at how do we help to continue that legacy, continue that foundation? Because for me, I like talking about money. That's like one of my favorite things in the world, is to talk about money. And so as a tax accountant, as a credit counselor, as a housing counselor, as a banker, I'm always going to talk about money. But for our young people and seasoned people like myself, how do we build from that? And so having that relationship with the financial institution allows you to build that. And that's what Bank On in Greater Milwaukee is doing. We're trying to align ourselves with community-based organizations so that we can work with young people and we can work with financial institutions to make sure they have these products and services that are really going to benefit the people. Because if you've got a product and service that no one knows about, no one can access, it really serves no purpose to have that product and service. So at this point in time, are there any questions? Because I am very passionate about money and I can be long-winded. So are there any questions?
Constance, to date, what banks in the Milwaukee area allow for these non-custodial accounts?
There are, right now, we are working with at least 3 financial institutions in getting clarification, because we want to make sure that everyone's on the same plane. There are some credit unions that actually do offer non-custodial accounts. Educators Credit Union offers a non-custodial account. UW Credit Union offers a non-custodial account. And Guardian Credit Union offers a non-custodial account. We are currently working with at least 3 major financial institutions that are not credit unions. I love credit unions, but there's at least 3 that we're working with to have them to shape their program so that it is better user-friendly for youth. And when we're looking at it, again, we're looking at 13 through 21, maybe 24, because we don't want you to turn 18 and then all of a sudden you're pushed into an account that actually costs you money. We want to give you that opportunity to work up to that. So again,
I was on mute. You're not able to say which of those banks you're working with at this time, I
not
guess.
at this time. And
Okay.
so again, a non-custodial account is when the young person has the access to the account and they manage the account. A custodial account is a little bit different, where you have to have a parent or a guardian be a part of it. So it would be just like for me, if my granddaughter wanted an account and she's under 18, we would actually be on that account together.
Hi,
Okay?
Constance.
Hi, Mark.
How are you?
I'm good. So good to see you.
Good to see you. Bob Glowacki just put a link in the chat that shows some of the banks, some of the institutions that you're working with. I saw Chase. Is that right?
Yes, Chase has a student account, which is a little bit different than a non-custodial account. So for the student account, you have to be in college for that. And so what we're looking at are accounts that would meet the need of, you know, you're 14 years old, you just started a job, that type of thing. But Chase account, Chase has a great account, but it's not a non-custodial account. It's more of a college account.
So
Ione, why don't you come on in here? I see that you're on the chat, but why don't you say your point, and then maybe you could talk about this importance of saving and getting started with these sorts of accounts that Constance is talking about. And so Ione, do you know Constance?
No, this is my first time meeting her, but I've
Okay.
been holding my horses to ask my question.
Okay.
Ask my question, and
Yes.
I'm actually posing for Bob right now because he accidentally sent me
Oh,
in the chat something he meant to send to everybody. So I'm actually
Oh.
just reposting it on his behalf.
Ione has my back.
Yes, quietly.
Yes.
But while I have the mic, as I would say, number one, I just want to say, Miss Constance, thank you so much for being on. I am actually the one that wanted to see your beautiful face because, you know, we are all people of color. Some of us are a little light-skinned than others. But, you know, it's just important, I think, for us to see each other in this light, especially with your history and relationship with money and banking and credit unions. Because I don't want to assume, but this may be the first time a lot of young people on the call are hearing about this outside of the what you should be doing conversation that may be coming from their parents or somebody in their community. But I do have two questions. The first question is, can you share with everybody how a bank makes money? Because a lot of times we attend things and we hear what we should be doing or how this product and service is better than something else. But I think it's really good to get a true understanding, a holistic understanding of what banking is, what is a credit union, because I think if people really knew how banks made money, then they would understand why they get charged the account maintenance fee, why they get charged the overdraft fee, why does a bank charge interest when it's loaning money, why does a bank not really give you interest when it's holding your money to loan it to other people?
You just answered your own question.
I know. I didn't want to talk too much, but you know, from you, it is important that we do explain it. Because so far we've only been talking about investing, and you're the first person to come on that really brought up banking and credit unions. And the second question I had really quick is, with the youth being able to access these non-custodial accounts, does that mean this is an opportunity for them to start building quote unquote credit because they now have something, a financial instrument in their name? And so by the time they go to get a credit card, they'll have some type of history. Well, I am interested about that.
So let me answer that one first, because that's the easy one.
Right,
so
right.
There are two types of credit. There's traditional credit, and then there's alternative sources of credit. So traditional credit is anything that's going to be on your credit report. Anytime someone would pull your credit report to assess how well you handle things like a student loan, a car loan, a personal loan, those kind of things are what's called traditional credit, okay? Non-traditional credit or alternative sources of credit are things such as having the relationship with the financial institution that shows that you put money in, you know how to save, you know the importance of saving, you manage that account, you don't overdraw that account. Now, this comes in handy when, let's say, you are just starting off in the credit world. And what we don't want people to do is go out and get a whole lot of credit, because a whole lot of credit is not necessary to build credit, okay? And so what you're looking at when you don't have a lot of credit, you can show all of these other things that you do well. You pay your car insurance on time. Not on your credit report, but you pay that. But when you are with a financial institution, you're building a relationship. So I know a lot of us have dated in the past, okay? And so when we date in the past, we just don't pick the first guy or girl that comes along. We do a little research and we look at, so what do you really have to offer? What is the return of my time? And so when you look at banking, that's what you're looking at. Banking and credit unions are a little bit different. So banking in a whole is about making money. And the way that money is made is through the cost of doing business. And so that cost of doing business can be based on the interest that is being charged, the fees that are being charged, the transactions that are happening. So I used to be a commercial, a banker. And one of the things we used to do is we had a vault. Guess what we had in that vault? We had some money in the vault, okay? We had money in that vault. But if you came to me and you had all your savings at that bank and that bank got robbed, would you be like, oh my God, all my money's gone? No, the bank is insured up to $250,000. So if you have $250,000 in an account and you have it in a regular savings account, first of all, I'm going to say, congratulations, you have $250,000 in a regular savings account. Second, I'm going to say, why do you have $250,000 in a regular savings account? Because the interest that you earn on that is not worth your time, okay? So again, when you look at banking, it is about profit generating, fees generating. So those fees and profit that is generated allows the bank to actually fund other people's things. So you have a mortgage for 30 years. The bank doesn't sit and hold that money for 30 years. They take that and they do something else with it. You get a loan for 5 years. They take that and do something else with it. And it's about that relationship. So when you're looking at the footprint of some of the larger financial institutions, they have different guidelines and rules. When you're looking at a credit union is a little bit different. It operates more on a community base. It still can do lending, but the outcome is different. With a credit union, it is owned by the members. So that's just a little bit different. And so again, when you're looking at the entire picture, you want a financial institution that's going to benefit you and what they offer. So if you are a parent and this financial institution offers an account for your young person or offers what's called a credit builder account to help your young person build credit, that may be something you're looking for. But if you're looking at being an investor, does this financial institution have products for me to be an investor? So when you look at banking, it's a relationship. You're looking at what all do you offer and how accessible is it to me? You may offer loans, but if I don't meet a certain criteria, it's not going to work for me. So I need to know what your criteria is so that I make sure I meet that. And when it's time for me to get something, I'm ready. Having a bank account allows you to get ready. So when the opportunity presents itself, you're ready to go. Ms. McNeil, did I answer your question?
You did. And the reason, honestly, and to share with the group, for some people that's been on for a few weeks, I do want to share this little story. When I was younger, maybe about 20 years younger, I was learning about banking and I was learning about investing. And the light bulb that went off in my head was, oh my gosh, banks take people's deposits at, less than, and gives them less than 1% return on it, but turns around and does auto loans and mortgages and student loans for 5, 10, 15%. And then I realized, oh, wait, that's the same thing that I could be doing as an investor. I can take my money and quote unquote loan it to Apple, Amazon, and they're going to pay me in the form of a dividend. Of course, it's not insured, of course, but just that kind of connection of how a bank makes money, and then seeing myself as an investor of being able to do the same thing that the bank does, but with my own money, it just kind of knocked it out the park for me. And so that's why I really wanted you to share with them to help see if they could also make a similar connection to how banks make money and how they've been learning how to make money through the stock market game over the summer.
Absolutely, because what that does is that return on your investment is extremely important. And when you look at what financial institutions are willing and able to do, even with a CD, that return is still not as high as it could be if you were doing an investment in a stock. And so again, when you look at your financial situation, you have to determine where are you going. Just like with anything else, you have to set a goal and say, where are you going? Where's the best use of my money? If I'm with a financial institution, this is how much they're going to charge me. If I decide to go to a non-traditional way, which would be a payday loan, this is how much they're going to charge me. And so again, for that same vehicle, are you willing to pay 3% compared to 24%? Now, if you're giving me 24% back on my money, I'm so happy with you. All you got to do is sign your name and I'm good. The other way, if it's 3%, I may have to kind of get you to jump through some hoops for that 3%, because everyone is looking at the return on the investment. And so that's what you look at across the board. But when you set a financial plan, a financial goal, those are all of those different tools and toolkits, the things that are in the toolkits, you're looking at that. What's going to be the best thing for me? Should I buy a single family? Should I buy a duplex? Should I buy a 4-family? Should I buy a foreclosure? Should I buy a deuce and a quarter? Probably not.
Well, one thing you talked about, buying real estate, which is a whole nother subject. One day we'll have to talk about that. But so much data has come out lately about the wealth gap, so to speak. And you just prompted this whole thought about home ownership and how important that is, that we begin to get our young people thinking about one day that in addition to everything else they're doing, that they'll want to own their own home. I think Terwan had his hand up, and then Mark. Terwan?
Yeah, hey, Constance. This was a really nice presentation, and your hair looks great.
Thank you.
I just wanted to say that. But since we're on the topic of these non-custodial accounts, which is something I've never heard of in my life, my question to you is: are there how accessible are these accounts to like different areas? Because I'm from Madison. Like, does something like this exist in Madison? And with these accounts that you create for these young people, can they use them to like link up to these financial services to start investing? Because like in order to invest, most of the time you need an account to connect. And are these accounts usable like for that financial service?
Great question.
Excellent question. The accounts, you can do any and everything that you want with these accounts. Okay. So the issue is actually locating the financial institutions that have that. Now, some people are comfortable with their parent or their guardian being on an account with them. But as we know, sometimes in our community, we've got 16, 17-year-olds who are actually the ones making financial decisions, who are the ones who are in charge of certain things, and it may not necessarily be the best thing for a family member to be on an account with them. So again, when you look at where these accounts are, we're working with FDIC and other institutions to identify exactly where they are. The best thing about the account is that you can put money in, you can take money out, you can do savings, you can do transfer of funds. So it allows you to do every single thing that you would do with any other type of an account.
And then specifically with Madison, University of Wisconsin Credit Union allows these accounts. Is that right?
Yes, UW Credit Union allows the account, and I believe it's up till, I think it's to your 21, 13 through 21. And with the account, you can do everything that anyone else can do with their account.
Mm-hmm. Good. So Dr. Shug, and then after him, I'll just see if Carol Maria has anything she would like to add to the conversation. Dr. Shug.
I wanted to make two quick points. First off, the Wall Street Journal had a nice little article, since we're talking about a little bit about real estate, and in this case, it was home ownership, and that homes are now becoming increasingly valuable. We're certainly seeing this in Florida, but one of the reasons now is families are, what's that? Families are, no, it's okay. Families are looking for spaces for offices, and they're also looking for spaces for young children to learn in. And houses, and people are getting out of more cramped apartments and trying to get into spaces. So bigger spaces. So the housing industry is really booming right now. It's quite interesting, the number of the dramatic increase in home starts. So that's something to think about, both at an investment side and as a personal finance asset side. The other thing is, just to round out the story that Constance is saying, there are socially good things that happen from banks that people really, we've been talking about banks making money, how they make money and so forth. And that's fabulous. And that's how banks usually think of themselves. But economists look at banks differently. This is a way that you put your deposit in, the bank takes that money and loans it to a business, helps you buy a new home, helps you buy a new car. You win because you're getting a modest return on your investment. All the rest of us win because we're contributing to economic growth. This is contributing to expanding GDP, gross domestic product. And so that ability of banks to take private, our funds, and then spin it out into the economy, it's a critical way that market economies grow. And so it's win-win, right? And that's what we love about when markets operate freely and correctly. There's a lot of win-wins out there, and the financial community does provide that sort of environment, just as with the stock markets providing win-win situations.
So one of the things I mentioned at a planning meeting is that these Tuesdays at 3:30 are too good to stop. And Dr. Shug has just prompted a whole nother discussion that makes me want to have a panel to talk about some of these things, because the next thing to say about what he said is that good that banks do to facilitate a thriving economy is in very short supply in communities of color. And that's a discussion that's being had these days, because even when companies want to be philanthropic and put money into communities in a way that will help them economically, to Mark's point, they want to do them through banks, and they want to do them through financial institutions. Another word for Terwan and all the rest of you, a depository institution. That's as distinguished from a payday loan or from a check cashing company, where they just want your money in and your money out, and they're taking a fee in the process, but they're not even going through the trouble to allow you to save a piece of that money if you wanted to. So I like that term, depository institution, because it is the umbrella term under which banks and credit unions fit. And we do need them in our communities, and we don't to the degree that we need to. So we thank Constance for at least trying to help banks wherever they exist to have products that can serve our community better. But we have a lot of lifting to do to get our community with the right sorts of resources that we need. So when people say it's time for change, it's time for change, and systems change, this whole banking industry is one of those that we need to pay close attention to. I'll see if Carol Maria wants to have any words at this point in time.
Sure, and I will say something. Start my video. There you go.
Mm-hmm.
So I want to thank Constance for all the hard work that she does. I mean, she's a hugely valuable partner, but Bank On across the nation has really seen a transformation because its products help people predict what it's going to cost to have a checking account. And so whenever people feel safer in their understanding of what fees they could be charged or how much is their minimum deposit to not be charged a fee, they appreciate the bank more. And so we know that through studies, and Bank On has really proven that through some of its research with its local partners. So we really thank Constance and all her partners across the United States who do this. And then Bob was talking about depository institutions. So I just quickly wanted to say we're the Federal Deposit Insurance Corporation. Because one of the big things that differentiates or makes different banks and credit unions different from payday lenders or check cashing services is that all the regulations that protect you, there's the Fair Credit Reporting Act that protects you against discrimination. And then there's different laws that protect the way that they treat applicants. And we can pursue cases where we feel like discrimination has taken place based on gender or race, or even because fees are charged higher to some groups of people than others. So you get those protections with banks and credit unions, but you don't get them with those really app-based money transfer services. So I do want to say there's a whole body of protections that banks and credit unions provide to people that we often kind of forget because it's not part of our everyday consciousness.
The other thing I wanted to bring up also is what we saw in this stay-at-home order in this pandemic is the need for financial institutions, because all of a sudden we couldn't go anywhere, we couldn't talk to anyone, we couldn't access anything. And so when you have individuals that did not have access to safe and affordable banking products, they had a harder time maneuvering through things because they did not have a bank account. They did not have access to online banking. They didn't have access to that. So when you look at the overall picture of Bank On, it's really meant to help people get to that level. So when things do happen, you feel safe, you feel secure, you can get your money when you need to, you can pay your bills without leaving your home, you can, access those things. And that's the most important thing about Bank On of Greater Milwaukee is developing accounts and working with financial institutions to develop those type of accounts. And Dr. Shook was absolutely right. Building real estate, personal finances is so important. I bought my first house when I was 25, and no one in my family, and I'm the baby, had ever bought a house. And I was a single mom of 3 kids. I bought my first house. And again, those kind of things can be generational. So not only did I buy the house, I told my kids, oh, everyone has to have a bank account.
Good.
And everyone has a bank account.
That's fantastic. We actually have 2 of our financial services resource panelists that are on this call as well. And I wanted to see if Craig Peterman wanted to comment on this, or even Craig's experience in working with one of the stock market game teams. And also Mr. Tarkington is on. Craig?
Hi, good afternoon. Again, my name is Craig Peterman. I just started working with the stock market game here in Madison, the 100 Black Men organization. They're working with 5 soon-to-be freshmen in the stock market game. So I volunteered to be, I guess my role is mentor
Mhm.
My job, my profession is a financial advisor, a certified financial planner. So basically, my clients come to me to help them manage their money and all their issues. And because I'm a certified financial planner, I get into everything that Constance was just talking about. Where do I bank? What products do I use? What mortgage should I get on my house? And the reason I'm getting involved is because our financial system, along with many things in our country, is so complex. There's so many choices out there, and there's so many people out there that unfortunately are going to abuse the system. And so if we can educate people when they're young and get them thinking about it, the best asset you guys have is time. You invest now, you set up a structure, you start putting money away little by little. Next thing you know, you've got $30,000 in your bank account and you didn't do anything. That's the way I see helping people build wealth and security over time.
Thank you
So,
so much.
sure.
And Mr. Tarkington, I'm not sure exactly how deep you got involved with the stock market game, but if you care to say a few words. Okay, he was on and not sure if he will be able to say anything at this time. I really appreciate this discussion. I was not sure, yeah, exactly how this would go, but I knew that Constance would really be able to interest us in what they're doing through Bank On. And this is sort of a national movement, and we are exploring ways that our collective impact initiative can support the work of Bank On and many of the other initiatives that are underway in Milwaukee and beyond, that's really trying to create a better playing field for the financial lives that our communities of color are engaged in. Uh, any other comments or questions at this time? Well, with that, I want to thank everybody for being on this call today. And we certainly want to thank Constance for her presentation. We've got the Bank On website up right now on the shared screen, and it's just bankonmilwaukee.org. And we really appreciate Carol for chiming in today, as well as our financial services experts. Next week, I'm very excited because for years, over 10 years, I've really wanted more information available to our young people about these careers in finance that we don't always hear about. And we've got two individuals that are preparing the presentation for next week. Constance, you'll be added to the invite list, as well as Carol, because those people who present, we also just add them to the list for future reference. If they want to chime in, they are more than welcome to do so. I'm also glad that we had some of our young people on today, and we're glad that you're getting this information, and hopefully you'll share it with others. And with that, one last time to see if there's any questions or comments. Otherwise, we will be able to adjourn.
I have one last comment. I asked that last question in the chat for Mr. Tawan, so that he can know that he can, even though he's in Madison, he can set up an account with Bank on Greater Milwaukee if he wants to, start building a relationship with Miss Constance.
That's
Absolutely.
a great idea.
Absolutely.
Mm-hmm. Okay. Well, thank you all. And as a matter of fact, just be in touch with any of your adult advisors, or put quickly in the chat right now if you've got other topics that you would like for us to format, because there's no one to stop me from doing these chats in in September and October, and we'll just see how far it goes. So let us know if you've got any other thoughts or ideas, because we've got a little momentum, and I don't see any reason to stop it just because the stock market game is over, because that's not a one-off deal. It's all part of a progression of orienting our young people. And let's remember the mantra to the economic way of thinking and living. And that's what we talked about today. And we want to have many more conversations like this. And so I thank you all. And we are basically able to now sign out. Thank you all.
Bye.
Bye.
Thank you.